Historic two-day sell-off. We've been talking about it all morning long. $5 trillion in U.S. market value wiped out. $2 trillion if you look at the rest of the world minus the U.S. What now?
Well, it doesn't feel good, but the sentiment, Frank, is really horrible at this point in time. Fear and greed index is at 4. During COVID, that number was 2. And the great financial crisis, it was at 12. And you know, extreme is 0 and on the negative side and 100 on the positive side. So you're at 4. The relative strength for the S&P 500 is at 23. That is the 12th most oversold in 20 years. And the VIX were close to 3 standard deviations above the long-term median. So all of this is just to say that things are very, very negative. It feels horrible. And when that's the case, usually that's a decent time to buy if you're a long-term shareholder. We're not going to resolve this anytime soon, Frank, but I think you've got to look for opportunities. That's my word of the day.
You know, it's interesting that you think right now is the time to look for opportunities. I want to play you a soundbite from our Jim Cramer. He was on our special last night talking about how he sees the investment picture, at least for this week.
If you wanted to try to bottom fish tomorrow, and I don't advise that, you have to worry that Europe is going to come after us. And I figure Europe comes after us between 3 and 7 days later. That would be the moment where I think if you wanted to do some buying, you would be fine.
So long story short, Cramer saying you should at least consider waiting for any potential retaliation from Europe. We did hear from the German economy minister earlier today talking very tough about the EU sticking together. Do you think there's any merit to what Cramer's saying, the idea that maybe you should hold off because there might be more potential landmines ahead?
It's entirely possible. I'm not good at market timing. I think that you can start, and I have been buying for the last couple of weeks, to be honest, and I bought on Friday, and I'll buy this week. So it's you start, and you average down. And then you have to think, though, longer term, Frank. This is not going to get resolved, and I'm not going to look good in probably a month's time. But I will say this, the median decline in the S&P 500 associated with the recession is down 24%. You're down 17 in the S&P from its peak, and you're down 21 in the NASDAQ from its peak. So we're getting close, is my point.
Okay. Are you concerned about a recession? So we had our flash CEO survey out. We're going to show the results right here. More than 50% of the CEOs, they believe that we're going to see a recession before the end of the year. We're showing the bar right there, nearly 60% if you look a little bit closer. What do you think? I mean, the idea of a recession, does that change the investability of the U.S. stock market? We had a guest on earlier saying that she sees a lot more opportunities outside the U.S. and emerging markets. But the idea of a recession coming, do you still continue to invest in the U.S. market, whether it's dollar cost averaging, buying bottoms that you think you see, et cetera?
Yeah, I mean, I still think the best place to invest is in the U.S., especially given the drawdown that we've had. But I heard your comments and her comments before about emerging markets. I agree with India. I love India. That is a big theme for me over the next decade. But I think there are more opportunities right now in the U.S. for best in breed, and you can actually upgrade your quality. You can own the #1 company in any industry at this point in time that's down double digits, that has good market share, good balance sheets, free cash flow, and good management teams. So I don't know if we're going to see a recession. We're certainly not in one right this moment, but could we get there? Of course. We have to see how this whole thing plays out.
All right. Well, on that note, why don't we get to 2 of your picks that you bought in recent days? It's Chipotle and Meta. Why buy these right now?
Yeah, so Chipotle is down 29% from its high, and they're going to grow same-store sales mid-single digits. Even if it's low single digits, they're doing things on the throughput side that's going to lead to better productivity and efficiencies. On Meta, you can get Meta right now at 20 times forward estimates, growing revenues at 20% and operating margins at 40%. Operating margins at 40%, and they're still spending a huge amount of money on CapEx for AI. And so their automated ads from AI alone is up 70% year over year.